and gold both rising on Friday because of that escalating revolt in Egypt. What should investors expect when the markets open tomorrow? John Kilduff is founder of Again Capital and CNBC contributor. Bill O'Neill, managing partner at Logic Advisors, and Peter Beutel, president at Cameron Hanover. Welcome to all of you. Mr. Beutel, let me begin with you since I introduced you last. What do you think the price of oil will likely do tomorrow in the U.S., and where do you think it might be, let's say, summertime?
Well, I'm expecting a lot of volatility, and I'll be honest with you, tomorrow it could end up $5 higher or lower. You know, the problem is, this looks like it's going to be with us for a while, and that's where I think it takes us higher longer term. But we are overbought right now. We're up into resistance, and we're not seeing Suez Canal shut. We're not seeing the loss of any barrels today, and that could mean that we could sell off here at any point. But I'm expecting volatility, and I expect we'll be higher by summer. I expect by May, when we normally see the high for gasoline, right, that we will be looking at gasoline prices probably 40 cents higher than they are right now, and crude oil another 10 or 15 higher.
John, do you agree with that analysis?
To a degree. Obviously, there's a lot of unknowns here. I do think this is going to be a quick event. I think that's the nature of things these days. The BP event when it came so quickly. I think this is not unlike that. And I think what the problem we have here, so whether or not we go a lot higher, is how this does spill over into other parts of the region. I think when the Saudis in particular look at Egypt, they see a lot of themselves in that country, demographically and the like, with the exception that they have the petrodollars to spread around and keep things calmer.
That is the essential difference, though. I mean, having spent time in Saudi Arabia, that is the really big difference. They have looked ahead and they have spread the money out among the population. Right. And also, a lot of people say there is a tighter lid there as well. So what do you think is the real chance of contagion? Because Saudi Arabia is thrown around a lot.
Well, and there's plenty of repression spread around. I mean, look at how the women are treated there. They can't drive, for example. I think people are probably not even understanding how repressive it is in Saudi Arabia for a great deal of the population. So I think it's a powder keg that could go. Now, what I had to balance that with, though, is that Iran's government did not fall after about a year's worth of protests and organized pushback against the government. So
Bill O'Neill, let's switch the conversation to gold, which certainly had been selling off there for some days, and then money comes in, as it often does in periods of distress. What do you forecast for gold now?
Well, I'll tell you, Tyler, if you look at history and putting Egypt in perspective, you can go all the way back to the assassination of Anwar Sadat. Every time gold has a rally at one of these political events, it is very short-lived. It usually fails, and the market comes down and does what it's going to do anyway. Now, I'm bullish long-term gold, but not bullish short-term. So unless, as Boone pointed out, this becomes an extended event that has a tremendous amount of contagion, I think that gold will not really do all that much short-term. Long-term, I still think it's the reserve currency. I still think there are plenty of problems. And just to throw one other thing out at you, Tyler, I think commodities, in a certain sense, causing a lot of what's going on, because we have all this food inflation. Food inflation in Egypt, Bob Pisani pointed this out, twice the level of their regular inflation. That's where there's a big problem, and that's where this could make this problem continue. Then you might have a different case as far as gold is concerned.
Peter Beutel, if, as you predict, or maybe that's too strong a word, but if oil goes where you think it might go, up another $15 or so by Memorial Day, if gasoline is in the $4 neighborhood, up a 40 cents from here, is there a risk that this rather fragile U.S. recovery is sandbagged?
Absolutely. We've seen before when we get over $4, consumers really pull in their horns. And Bill brought up a great point here, is one of the things that started this whole thing in Tunisia was higher food and fuel prices. And now, curiously enough, the rioting is pushing fuel prices even higher. we're getting this real spiral going on where people are buying commodities because of uncertainty, and the uncertainty is feeding back into itself in a feedback loop.
It's one of the great ironies, I think, is when we talk about inflation in this country, we are always prone to say, oh, but the core inflation, when you strip out food and energy. But that's what people care about, for goodness sakes.
I think we make fun of that in equal change at the same time.
Well, we do.
We definitely say that. John, isn't that the real danger to the contagion here in the U.S. in an economic sense, is the spillover into commodities and what that means to our economy? If we do see fuel prices rise, if we do see even gold rise here, and we do see food continue to rise, that this is the real threat to our economy, at least from this particular crisis.
No doubt. I mean, in the past several recessions, whether it was a dot-com implosion or the recent mortgage problem, the best supporting actor role went to crude oil for spiking up, whether it was unheard of $30 a barrel back in the day or was $147 this last go-around. And this will knock the emerging economies off their tracks, too, because they are heavily manufactured, heavily energy-dependent, fossil fuel-dependent. They can't absorb these costs, and it's just going to reverberate through.
Bill, what do you see happening for the dollar?
Well, the dollar, I think, will continue to go back and forth in the trading range. I don't really have a strong view one way or the other. I'm not really super bullish or super bearish. I would point out that other commodities, though, copper, $4.35. Cotton over $1.15, all very, very inflationary.
Silver was way up too.
Silver, the speculative playground, it was. That affects those nations more than it does here. We can absorb that better, but the economic levels, all you have to do is go to Egypt and drive through Egypt, and you can see if food goes up just that much, it makes a huge difference. And
you have a big hunk of the population living on $4 a day or less.
Absolutely,
and that is
so many stories have cited the price of wheat as a major cause of this. It's really interesting.
Now, I would just say the geopolitical premium we talk about in oil prices, if we lose the Israeli-Egypt peace pact that's held together for so long, that is going to be inflated for an extended period.
Gentlemen, thank you very much. Always great to be with you, John, Bill, and Peter. Appreciate it.